Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to talk about a SPAC. So it's gonna be a more speculative video because I was trying to find a more speculative investment because I have a small percentage of my portfolio where I go more on speculative stocks, and I was trying to find something interesting which is not on hype yet, and I came across this, which is basically Holicity, which is a SPAC, ticker symbol HOL, which is now trading at around $19.52, went down a bit on Friday, minus 8.14%, which it should merge with Astra. Now, Astra is a business that works in the space economy, right? So rockets, this kind of fancy stuff. And it's interesting because, first of all, it looks like that it is trying to do what basically, for example, if you have heard the last interview by Cathie Wood on the CNBC, she was talking about how also in the space economy, why it is going to grow, because as we have seen with Elon Musk, SpaceX, which I would love to invest in SpaceX, but sadly, it's not public. I'm not a millionaire and I cannot have access. Anyway, they are trying to see the space in a way that is gonna be easier going on. So we have seen, for example, those rockets with Elon Musk that can be reusable, right? And that put costs down. And by doing so and developing even more and more technology, going into space can be easier. It would be easier in the future. So that's basically the main idea on why the space economy can evolve drastically and significantly over the next, let's say, 20 years. And differently from SpaceX, which they are planning bigger projects, they are aiming to go to Mars and this kind of stuff. Astra is actually more related to doing stuff cheaper for the Earth. So their idea basically is not to do incredible rockets and going on into Mars and stuff, but their idea is trying to give access and trying to get the space access easier for actually everyone who wants to, I don't know, pay and send a rocket in the orbit, right? I don't know, if for whatever reasons, if you have a business and you need satellite, their goal is basically trying to send rockets in the orbit daily, on a daily basis. The management, basically we have the chairman, founder, CEO, Chris Camp, which has worked at NASA. Interesting background over there. See, their mission is actually to launch a new generation of space services to improve life on Earth. Sending these kind of rockets in orbits will be cheaper, faster, easier for basically everyone who has the money to pay it. It will not need hundreds of millions of dollars of investment to basically launch a rocket in the orbit, and that's what basically Cathie Wood was talking about over there. Now, interesting stuff. She is creating this sort of space ETF, and I don't know, but if this is a SPAC and if they will merge and their product is actually interesting, as they say over there, well, why not? Cathie can add this company to their ETF, space ETF, and obviously, when Cathie Wood buys a company, the kind of effect she has on the stock price, right? But as of now, none of this has happened yet. Anyway, can be interesting. Here in their presentation, now this is obviously something to make you buy the stock, right? So when you see these kind of documents, just read them, but be careful. Anyway, the space is the next economic frontier, as they say. Estimates of $1+ trillion in total space economy in 2040. 216 billion satellite manufacturing spending through 2030. 40.7 billion government investments. Here they are forecasting that in the next decade, the number of satellites that will be launched will increase drastically. And what they are saying is that 90% of satellites to be launched over the next decade will have a weight of 300 kilos or less. So basically, as I told you, they are going through an idea of a satellite which is simpler, right? Easier, basically cheaper to produce, and all the process itself is going to be faster, cheaper, and it can be done, as they say, on a daily basis. Now, I have no idea whether this can be actually true or not. As I told you, is a speculative stock, and as we can see from here, you see the access to space is 25x, too expensive, too infrequent, and too slow. The satellite launched annually, and now we have tens. What they are explained is that these kind of things has to scale in the future, in the next 10, 15 years, up until thousands of satellites. The size, as of now, they have these massive, cumbersome rockets, and what they're saying is that all of that will be way cheaper, way lighter, right? As we have seen, for example, if you imagine a computer, right? The first computer machine ever built was basically big as an entire room. But as we have seen, 30, 40, 50 years later, things have changed drastically. So this kind of stuff that you start with a cumbersome, heavy stuff, very costly, and then go on with the lighter stuff. Can this also happen for satellite? I don't know. According to them, yes, it can, and according to them, they are the leading business by doing this kind of cheaper equipment for space economy. So that's why it got my mind, actually, this company. You see, the launch costs tens of millions of dollars as of now. What they are saying is just millions of dollars. And the time to launch, months. Their idea is days. The interesting part about Astra is that they have been very quick in actually evolving and developing the technology. Now, they founded the company in 2016, October. Now we are in 2021, and in December, they have demonstrated orbital capability. So they reached the orbit with one of their rockets. This result is basically in just 4 years, which it's 3 years faster than SpaceX, 8 years faster than Rocket Lab, Virgin Orbit even more. Now, 4 years is very impressive, so credit to them. And when we see the leadership, we have to add also 2 executive leaders, so which are not part of the board, but they are executive, which have worked at SpaceX. The first one is Chris Thompson, chief engineer, a SpaceX background, and Boeing. And then Virgin Orbit as well. And then Bryson, I don't know the pronunciation, Gentile has worked at SpaceX. That's their plan, okay? So 2021. This is kind of very ambitious, but anyway, that's what they're planning to do. In 2021, they're gonna do commercial launch operations. 2022, they're planning to go on a shift into monthly launch, then weekly, bi-weekly by 2024, and that's their main goal. 2025, they are planning to launch a rocket basically every single day. Here we can see the financial part, which is all of expectations, right? So those are obviously optimistic. Anyway, they are planning to grow from 4 million in revenue estimates by 2021 to 1.5 billions in 2025. And that's kind of interesting because you see over there operating expenses 806 million, capital expenditures of just 24 million as they scale. So that's their idea. And that will give a cumulative unlevered free cash flow, which is gonna go positive in 2024 over there. And their margins are impressive, as they're saying. In my opinion, even probably too high, according to these presentations, because over there, they are presuming a 45% free cash flow margin, which is huge. Probably Facebook has it. Anyway, that's just crazy, in my opinion. Anyway, their idea is that obviously the growth, projected growth, is huge. And what is interesting about it, I don't know whether they're gonna achieve that. Look at the gross margin, going from 20% in 2022 to 70% in 2025. 2025. So those expectations are obviously very ambitious. When we take a look at the transaction summary, we see that the company is basically the pro forma ownership. 12% is going to go to SPAC investors. The cash that is going to be raised is 482 million, and that will give the pro forma basically enterprise value of 2.1 billion. According to their estimates, the valuation of 2.1 billion is just 3.1x 2025 adjusted EBITDA. Now, the problem is that this valuation was when the stock was around $10. Now it's 19.50. So we are going to see what the valuation will be. Anyway, their main idea is to create this hyperscale space rocket business where they can basically build the things in a very costly, efficient basis. Focus on all metal manufacturing to leverage learnings and automation of past 20 years in automotive assembly, so in order to reduce the costs. According to them, the Astra launch system is portable and global. So meaning that their business will be able to launch these kind of small rockets from basically everywhere. Everywhere someone buys their product, their service, they will be able to go there and launch a rocket. Okay, so whatever you ask. The launch system fits in 4 standard shipping containers and only requires 6 Astra employees at a launch site. And then here you have all the stuff, rockets comparisons. Anyway, if you want to read this one, you just go to Astra Investors Relations, and that you find everything you need. Now, what I want to do is actually to go there and trying to understand how is the stock priced today. So what are the expectations? And here I put the revenue they are saying until 2025, and then those are basically, I put the growth rates. Those are their growth rates. I put, so from 92 is their estimates. And then I obviously decreased it 60, 40, and 30 until 2028. Then free cash flows. So the percentage, they say that is going to be positive in 2024, 177 million, and that would be a margin of 22.69% of revenue in terms of free cash flows. Now, their estimates in 2025 are 680 million. So that would be 45 point something percent. Anyway, I wanted to be more conservative, so I just put 30%, which in my opinion is still high. Anyway, let's see what we get. So we take the cash flows, we put them in the formula, and then the requirement, I put a 17% discount rate, very high, 4% perpetual growth rate, and we have that today's company value will be 4.2 billion. Right, so now shares outstanding, all this kind of stuff, I don't want to put it because it's a SPAC and can change every time. Anyway, that would be, let's call it a sort of possible fair price of the company today. The SPAC price at the moment is 19.52. Pro forma shares outstanding 261 million. So we take the equity value minus the cash that the transaction will give to the company of 482 million. And we have that the pro forma equity value at the moment with 19.52 dollars per share as a price, it's 4.6 billion. So as you can see, it looks like it's fairly priced, right? So 4.6, 4.26. So that's why I was also interested in the company. However, guys, this is basically all expectations, right? So pay very attention to it. The risk over there is extremely high, very speculative, because at the moment they basically don't even have revenue. So they have to start all of that. You know what? I haven't decided yet, but I just wanted to show you this company so that you can go on, do your research, and try to understand whether it can be interesting for you or not. In my opinion, I am interested. I will decide in the next week if I want to buy some. All right, I'm gonna see also what the share price will do. If it comes back a little bit, I could be interested. I don't know, just tell me down in the comment what's your idea on that. So that's the end of the video. Leave me a like, subscribe to the channel, and as always guys, have a wonderful day.